and record, and let's go ahead and get started. So first of all, again, welcome everybody to this. Going to be the first class that we do in quite some time, and this class is going to be more around how we are able to learn and how we're able to get these different foundational concepts down pat so that we can have the opportunity to come into the market every day and not panic. Because what happens with every single person every single day is that oftentimes we do panic and we don't even know what the heck is going on. And honestly, I think the best thing that anybody can do is be honest and say that yes, more than oftentimes people do not know what's happening when it comes to the market. With that being said, we are igniting a brand new series, which is going to be the Level Up series. This series, as I said before, I'm going to be able to not to just talk about trading. So we're going to cover trading, credit, business funding, the whole nine, everything that we talked about. But there's going to be a whole separate series here. And for this, I want you guys to drop a three. I've learned and I've been studying a lot of things on neuroscience, and everybody talks about manifestation. Everyone talks about, how to get your goals, how your thoughts create, like they do create reality. Not everyone talks about the science behind it. Very few people, and actually, I'll be right back just one second. One of the people that I look up to when it comes to this field is actually a doctor called Joe Dispenza. So Joe Dispenza has three different books. I'm gonna link him up. By the way, I do not make any money by this. I'm just showing you guys what really has helped me myself level up and level up my family. And it starts with this, with the thoughts and everything like that. So I see lots of threes. I am going to do lots of classes and webinars and master classes on these things. This will change your life. Yes, trading is great. We're able to make money and everything like that, but I'm going to tell you something about life. I've learned that in life, once you get the money and you got the opportunity to do whatever the heck you want, life is going to present you problems that money can't solve. So what do you do then? Right. So I really, really hope that this right here, this level up series, is not just a way for everybody to make money and learn how to make money, but on the other hand, is a way in which we are able to build ourselves every single day to understand what are the habits that we have to instill when it comes to the mind, when it comes to financials, when it comes to wellness, these different things that no matter how well or bad, life is going, we are still grounded and connected at the end of the day. So let's go ahead and get started. Just wanted to cover that. I see lots of threes, so I definitely see that it is an interest. And then we are going to go ahead and quickly talk about the market. So what is the market? Again, the market, so to a lot of people like me, myself, was something that was very, very scary at the beginning, right? I did not know anything about the market. And the way that I started trading was actually using retail trading concepts. So whenever you see anyone talk about support and resistance, EMAs, and these are things that I will be very, very honest. This is how I used to trade in the past, and it works. Trust me, this stuff works. When I taught at EYL, I used to teach and educate talking about retail trading concepts. Everything has changed. Why did everything change? Well, things starts to change when you understand that the market, it has a order flow. For you to understand how the market is and where it's headed, you have to understand what is the order flow. Aside from the order flow, you get these key levels. Everyone talks about Microsoft over 460 for calls, Apple over 228 for calls. What most people don't understand is that those key levels are liquidity. So what is liquidity? Liquidity is the fuel to the market. Consider it like a car. A car needs fuel to be able to run. The market is seeking liquidity at all times of the day to be able to continue running, if you will. The last thing here is areas of imbalance. There's going to be certain times where the market is just ripping through an area, and you need to understand where price was not fair. The whole scope of the market is to be able to seek liquidity and to be able to provide what's called a fair value price back into the market. Again, this may seem like a lot right now for those that are very, very new, but I can guarantee you that by the end of this call, and we have 54 minutes left, things will definitely make a lot more sense. So let's go ahead and get started. Price is doing two things, either seeking liquidity or rebalancing price. I want you guys to instill that into your head. Price is either doing two things, either going for that key level or It is rebalancing price. That is all that price is doing. All the other stuff that you hear about, the MACD, yes, these are indicators that have definitely helped us in the past. But at the end of the day, these things are noise. So with that being said, we're going to first cover order flow and market structure. For this class to work, I really want you guys to participate. So I will say drop a one, drop a two. It's not just to see how cool I am, but it's to understand and gauge the audience at the end of the day, just to make sure that we are able to go to the next one. We must first understand order flow before we understand liquidity and before we understand areas of imbalance. And then lastly, before we understand the models that we're using every single day. So with that being said, I'm going to go ahead and share my screen. I'm going to go right into trading view. We're not going to do too many slides no more. It's been enough talking. It's 2024. We got to get to it. It's just that simple. So let's go ahead and get started. Here I have my trading view application. I'm going to put this towards the side. And here's what I want you to understand. Every single day, we have the opportunity to be involved in something called bullish order flow, or we have the opportunity to also be part of bearish order flow. So I'm going to put bearish order flow right here. And I'll go ahead and just quickly change. I'll change the color here. And bullish order flow is just a sequence of higher highs and higher lows. I'm going to go right to the basic. Again, it's going to be quick, but it's going to be a really good recap. The market at the end of the day is going to make a what? A higher high. Then it's going to retrace. Every single retail trader you see out here talks about the market has to retrace. Why does the market have to retrace? And we're going to cover that, right? So after the market retraces, it's then going to go ahead and make a new higher high. Drop a one right now if based off this graphic that I have right here. Are we bullish or are we bearish? Drop a one if you think that we are bullish. Higher high, higher low, and then we have a new higher high, right? And I'm going to go ahead and just quickly, right? So we have our higher low, which is HL. For those that are still new, it's HL. And then here at the top, we have our higher high, right? So in order for us to continue going up higher, price has to break what? The last higher high, right? And then from there, hopefully it will go ahead and do the exact same thing. Retrace and continue going back up. These are sequences of higher highs and higher lows. As long as we have that, we are pretty much good money, right? We are pretty much good to go, right? This right here, and that's a really good AB, what's up, bro? That's a really good comment there, right? So this, yeah, so that would be a swing low, right? So price goes ahead, breaks that last higher high, it then goes ahead and creates a new higher high, and then price retraces, and then it creates a new higher low, right? That right there is bullish order flow, right? Now let's go to bearish order flow. It is the complete opposite. We make a new low. That new low always retraces. Everyone says it just retraces. No, it's not just retracing. It's picking up prices that it left behind, right? And then we make a lower high, and then we make a lower low, and then we make a lower high. So it looks like a staircase, right? That's exactly how the market moves once we are in a bearish order flow. So this will be our lower low. Then we have here our lower high. And this is where a lot of people actually get a bit confused when it comes to these different things, right? And then once we break that low, so once we break that last lower low and we make a new lower low, that is called a continuation towards the downside. So basically, if we have this last low and we make a retracement and we break that towards the bottom, this is a continuation or a indication that price is moving towards the downside, right? So this will be a continuation right there. And this right here will be a lower low. And there's this right here. Is this right here a lower low or a lower high? Anybody in the chat? Chat or audio, it's cool. It's cool. Lower high, right? And then we finally break another lower low. Now, let's go back to the bullish order flow right here. Now, let's say this right here is the last higher low. I want you guys to understand when we are going up, that last higher low is a protected low. Protected low. That last higher low is a protected low. Can someone tell me why is that last higher low a protected low? Anyone, try to guess. Just anything you want. Why? What happens if we break that?
Price ain't going down to that stop.
Correct.
It already did the damage right there, so it's probably not gonna go up. That probably created a rejection block or something like that. So it's probably safe.
You got it. You got it. And
Good
for
answer, bad answer.
no, that's a really good answer. That protected low, what that basically means is that we cannot break below that level. If we break below that level, what does that mean?
That means we are no more in a bullish trend.
There we go. Beautiful. Beautiful. So I'm gonna bring in some concepts. Drop a one if so far lower lows and lower highs, we got that down pack. If we got that down pack, then let me know. Okay, I see 4 ones. I need more ones than that. Drop a two if you still don't understand. I'm not leaving until we understand this. Okay, so Hazel. Okay, I got you. Right? So higher high is the first move, right? That's the first expansion move that we're doing towards the upside. Higher low is a retracement. Price always comes back, right? And people always say, well, get in on the retracement, right? And we're going to cover why. So we're going to decipher and make a bigger story out of everything here. Once we break that last higher low, hence the last high, and we break it and we make a new higher high, we are still indeed bullish. Now, when we make that last higher low or we retrace, this becomes a protected low for many different reasons. It becomes a protected low because if we go like this, are we still bullish or bearish? Right? Once we break that protected low is basically indicating that now price may start to what? Shift. So some folks call this a market structure shift. So I want you guys to get to know these different terms. So MSS. So MSS is market structure shift, right? And all we care is that price broke below that last higher low, aka that protected low. Now, if price would have stayed above it, then we got money. We're still bullish. But more than oftentimes, price will go like this, create a market structure shift right at this point, and then come up, and then come right back down. How many times have you seen this graphic right here happen? Drop a one if you have seen this exact same pattern happen on the 1 minute time frame, 2 minute time frame. This is the order flow. We are going against an algorithm. It's not the buyers, but we are going against an algorithm. The algorithm was designed to do this exact same thing, right? So that would be a market structure shift. Is when we are shifting the order flow from bullish to bearish, vice versa, bearish to bullish, right? So just to top it off, just real quick, when we break that last higher high, like for example, right here, anytime that we have a continuation, so a continuation when we going up means a break above the last higher high. That is called a break of structure. So break of structure, we call it BOS, right? So BOS, and I'll put it right here. And that would be right here. That's one break of structure. And then this as well is a break of structure. So this right here, if we go towards the bearish side, is this a break of structure or a market structure shift? Right here, where I have it right here. Drop a one if you think that this is indeed a break of structure. Right here. 1000%. Why? Because we just broke below the last low. Okay. How about this right here? Let me go actually and draw it out. Right there. Is that a break of structure? Okay, excellent. I see a yes there. Now, what happens if we go like this? What is this right here? Market structure shift. Drop ones if we got this so far, right? We started with the higher highs and higher lows. What is that bullish order flow? And then we went on to talk about the protected low. And then we finally talk about on a bearish side, once we break above that last lower high, that's when we see a market structure shift or the order flow going from bearish to bullish. Something else to note, something really important to note here, and please take this down. In order for us to continue going up, we need a body closure. So we cannot just wick here. Like this cannot just be a wick, right? And then we come down. No, we need a body closure for it to be a market structure shift. Body closure is what we need here. Why? Because that's double confirmation, if you will. Okay. So now that we have that, and Hazel, the terminology takes some time. It's I wouldn't say advanced, but it's just different terms for different things. You will definitely get a lot acclimated once you like practice it and you see it. It's second nature. Higher highs, higher lows. Then of course we have here break of structure, and we also have our market structure shift. Okay, so now that we finished with that,
question.
yeah.
Is the MSS the same as change of character?
Great question. Only thing about the change of characters is that the change of character goes ahead and breaks the last high before it breaks the higher low. That is the only difference.
Got it. Okay. Thank you.
Yeah. So even if you go, for example, like if I put on, let me put this one on. If I put on the Lux Algo one, they don't call out market structure shift, only on the higher time frames, right? Like for example, here, change of character right here, but it has to break the last high before it does that. That's the only difference, but they mean the exact same thing. They mean that we are seeing a change when it comes to order flow at the end of the day. Okay, excellent. Next topic that I really want to cover, and drop a one if this makes sense, if the way that I'm explaining it is starting to make sense. Now we're going to talk about liquidity, and I'm going to talk about how a lot of people make a mistake of understanding the market by not understanding what liquidity is. The way that I used to teach in the past was this. All right. Let's say the market's going like this, like this, like this, like this, like this. And then finally we get a breakout. The way that I used to teach before was saying, well, this is a resistance. Well, this is support. Well, what do we see here? Liquidity is what drives the market. Why? Because whenever you see that the market makes this, for example, higher high and higher low, this high, that's a liquidity point. This low becomes also a liquidity level, right? So don't just think that it's support and resistance. It's not support and resistance, because I'm going to tell you how a lot of people get smoked every day when it comes to the market, right? Let's say, for example, this level here is the level of 397, right? And let's say we're saying, well, we may see a break above 397. What happened right here? And why did I do it just like this? Because more than oftentimes when price comes up here and it hits 297, the market is taking money from two people. The market is taking money from two people. That's all. Listen, the market, that's the most gangster vehicle that I have seen in my entire life, because it literally goes ahead, point to point, taking everybody's money. That's all that it is. The biggest bully. And why is the biggest bully? Because you got to think about the following. Let's say at this level right here, 397, we got two different personas. We got the first persona, which are those that got into shorts or selling. And then we have the other persona, which are the breakout traders. The breakout traders, whenever anyone says they're a breakout trader, I laugh, because you're barbecue chicken to the market every single day. Why so? Let's say, for example, I wanted to go ahead and short. If I want to short, I'm going to go ahead and put my stop loss right above that level of 397, right? So what is the market doing? The market is going and it is targeting your stop loss. So it goes and taps your stop loss, gets you out the trade, takes your money, and then brings it on the opposite direction. That's persona number one. Persona number two is the person that has trigger fingers, right? And as soon as price hits 397.99, they're already going into buys. And what does the market do? The market lets them feel a bit of accomplishment and profits and green just for 2 seconds. And then what it does, it goes and sweeps out and goes in the opposite direction. That's why I no longer want you to think about these levels at support and resistance. Martin, I think we may need another meeting. Thank you. But we have 10 minutes here. I no longer want you to think about the market when it comes to levels as supported. I want you to think about it as liquidity. Price is going to seek liquidity, and price is doing 2 things. The price is either going to retrace, try to go up to that high, break through it and continue, or it's going to go up and then come right back down and go in the opposite direction. That's why it's very important to wait for body closure when it comes to these levels. If we do not see body closure and all we see is wicks, we are going right back down. So again, the market gives you different ways, or the algorithm gives you different ways in which you're able to understand where the market or where price is heading to next. So I'm going to quickly go ahead and talk about today. Let me go ahead and just turn off these different indicators. I'm going to go to the daily time frame. And if we look here, what do we see? Yeah. I don't have that password, Mark. What do we see here? Well, we are seeing that right now price is definitely very bullish. Is this a key level right here? This one right here? Why is that a key level? Drop a 1 if you think that's a, oh yeah, wicks lie now. Yeah, wicks do lie now. That's a fact. But the wicks do not lie because the wicks give you confirmation, and I'm going to tell you why. That's a very key level, right? This is a key level. Why? Because that's the last high. What did we just speak about? Price is going to do what? Price is going to expand, make that higher high, then make a higher low, and then go one more time. So I have no worry that the market before the end of even tomorrow, it will definitely go here to 27 to 2036.2. Why? Because that's the last high. With liquidity, you are able to really predict where price is going to. You have no reason why. And again, we're talking about just order flow and liquidity, but I'm also going to talk to you guys about how with imbalances and fair value gaps, this helps to complete the picture, right? So we see our higher high. That's the last higher high. What is price going to do? Well, price is definitely going to go ahead and tap this. And I will bet anybody that wants to bet $5,000, we could do it right now. The price is going to go this way because the order flow, the interbank delivery, when it comes to the algorithm, everything aligns that is going right there, right? So that's liquidity. What else is liquidity? This is liquidity. This is also liquidity. These wicks give you take profits levels, right? These wicks that are being left behind, these are all areas of liquidity that maybe not next week, maybe not next month, but price will definitely come back and get this money because that's the only way that price is going to be able to move is by seeking liquidity, right? If we take it, for example, to the 15-minute time frame, how do we know what's the next liquidity? Well, it's the last high, right? This is an area right here that price can definitely go to, right? We also have, and as you can see, I already have a level here. That was the swing point. Any swing points, so your higher highs and higher lows, those swing points, those are going to be areas of also liquidity, and I'm going to explain how. Prior to us knowing any of this area right here, the only things that we knew about were the following. We knew about this long-term high that's up here, and we also created this intermediate high. So we have our intermediate high, and we also have our low as well. This right here is a price leg. I really want you guys to start approaching the market price leg by price leg. So if I draw this is where we're at right now. That's all that we have. A low and we have a high. So let's go ahead and continue playing this. Price more than oftentimes does what? It retraces, right? So price will always retrace. We see that price is starting to retrace. But by the way, how do you know if price is retracement? You need at least three red candles closing below each other. Yeah, I'm telling you guys, I've been quiet for quite some time, but it's been a lot of studying, a lot of learning when it comes to life. What was I gonna say? Yeah, everything is a price leg. So I care about this price leg. Why do I care about this price leg? Because for price to continue going up higher, it needs to do what? It needs to retrace and then break above this last high. If we do not do that, then more than oftentimes we're going to go ahead and seek that low. So I treat now price leg by price leg. And you're going to see that as price is retracing, it's going to come to a point where price is doing two things. Price is going to try to rebalance, is rebalancing areas of imbalances. I'm going to talk about that here in a second, but I just want you to see the picture. You see how it comes down. Now it's starting to, just pick back up. And then finally, price is starting to now look a little bit bullish, if you will, still coming down. And hopefully it comes down to this area right here. And by the way, something else that I do recommend everyone to do, you can you can actually get your fibs, and you can actually get the price leg from its lowest point to its highest point. So for example, I can do something like this, right? And all I'm doing is that I'm putting it from my lowest point of my price leg all the way to my highest point of my price leg. I only have my 50% turned on. Why? Because more than oftentimes off a retracement, you want to get in at the 50% or at the 62.5%. For those that like to use fibs, that could definitely help you out. And what do we see? That more than oftentimes that 50%, that 62% will more than oftentimes get actually respected, right? So we see here price is still going. Again, we are not still bearish, if you will. Price is just trying to rebalance itself, and then finally it does get the opportunity. And where does it go? Right to the high. No one, I mean, my godson will be able to tell that. Why? Just by understanding that the price moves in price legs. Price is going based off price legs. And once you are able to understand that, then that's where you're able to understand where the next liquidity is at. And again, all I had to know was that this is the low and this is the high. And where does price go to? Price is going to go right to that liquidity level. And you see how right here, we didn't really have much of a body closure above this level. It's all wicks. These wicks are telling you a story. These wicks are telling you whether or not it is a sweep or whether or not we are actually buying and we're going to continue up. So let's see what the next couple candles do. Here's where I like it. Why? Because now we get a full body closure. So now I don't care no more about this price leg. Now I care about which price leg? I care about this price leg. Why? Because this price leg allows me to understand where the high is, and then again, where the areas of imbalances may be as well. Questions, comments? I want to stop there because we did cover a couple of different things that were a bit advanced, but just
Chris,
yes.
can I drop some sauce on them?
Please, Smurf, please go ahead, brother. Please, bro.
All right, so listen, I'm gonna tell y'all what the market do every single day. If the price is bullish, like today we had a bullish candle on a daily on NQ. Tomorrow, the Judas swing is probably gonna go for a 1 hour bullish fair value gap. A 1 hour bullish fair value gap is gonna be the first draw on liquidity. If it's bearish, like if we take out let's say we take out a low and we close under that low on a daily candle, the next day, the first draw on liquidity is going to be a 1 hour fair value gap to the upside. It's going to Judas up there, right? And then if that 9 o'clock candle closed bearish, that 10 o'clock silver bullet time is going to be a massive short. Every day this happens. Like it happened today. If you look at
I'm on the 1 hour right
NQ, I
now.
think Yeah, if you look at NQ right now, when the market opened, where did it go? It dropped. So every day I'm looking, if I'm bullish, my first trade is a short to a 1 hour fair value gap every time. You see what I'm saying? And then once we get down there, I'm not bearish anymore. I'm getting out the way. But it does that every time. Like if it takes a high, the first draw is going to be a 1 hour bullish fair value gap. Like tomorrow, book it.